Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. Bulls remain in charge. Market gains for the fourth straight session. The Nifty and the Sensex hit fresh 5-month highs. Financials lead from the front. The Nifty Bank and Mid-Cap Index end at record closing highs for the second straight session. The Reserve Bank Annual Report reiterates 6.5% GDP growth in FY24 but warns that global slowdown and financial market volatility are risks. Highlights: the RBI transferred 1.3 trillion rupees to the contingency fund so as to raise its equity to 6% in keeping with the Jalan Palin mandate. Chennai Super Kings lifts the IPL trophy for the fifth time after a last ball win over the Gujarat Titans. Jio Cinema breaks the world record for the most concurrent views on a live-streamed event with 3.2 crore viewers watching the final. Private equity investors are looking for more than just a spectator seat in companies they invest in. So far in 2023, PE firms have picked up controlling stakes worth $1.3 billion through just 5 deals. That's already 29% of the value of such deals clocked in 2022. The final contours of the draft digital competition law could be ready soon. Sources tell us a 16-member panel is likely to recommend criteria based on active users and global turnover to identify gatekeepers. The law, if passed by Parliament, could have major consequences for big tech companies. Some hard-right Republican lawmakers reportedly say they will oppose the deal to lift the U.S. debt ceiling for 2 years. President Biden and House Speaker Kevin McCarthy had reached an in-principle agreement on raising the debt limit. However, the proposal needs to go through the U.S. Congress. Home Minister Amit Shah and violence-hit Manipur holds discussions to find a solution to the ethnic crisis in the state. The centre announces 10 lakh rupee compensation for families of those killed in clashes. Congress leaders, led by the party chief Kharge, meet President Murmu. Russia accuses Ukraine of launching drone attacks on its capital. Moscow calls it a terrorist attack, says air defenses destroyed all 8 drones. Ukraine denies any involvement. Well, let's start with the market action of the day. Another good day for the bulls as the market gained for the fourth session. Nifty and the Sensex ending at fresh 5-month highs and are now about 1% away from record highs. The broader markets in line with blue chips rising. Both the Mid-Cap Index and the Nifty Bank ended at record closing highs for the second straight session. Financials remained a major support to the market rally this afternoon. Now, the Reserve Bank of India's annual report shows that the central bank's income grew by 50% last fiscal and it set aside 1.3 trillion rupees towards the contingency fund. With this, its available realised equity rises to 6%. That is against the Jalan Committee requirement of between 5.5% to 6.5%. The central bank has also reiterated that the economy will grow by 6.5%. Lata joins us now with the highlights from the RBI's annual report. Lata.
The big takeaway from the annual report is that this year the Reserve Bank has made a lot of money. It's therefore transferred more money to its balance sheets, to its equity. Let me take it line by line. First, the balance sheet. On gold revaluation account, that has gone up because rupee depreciated and gold appreciated. It's gone up by 23% to 11.2 trillion. But the big fall came in the foreign securities that RBI is holding. All the reserves are not held in cash. They are held in US treasuries or euro bonds. Now, all of them saw a fall in value, fall in price because the yields went up, because there was interest rate hikes. So the total mark-to-market loss in foreign securities is 1.65 trillion. Now, because of the fall, which is taken out of the contingency fund, from the P&L, the Reserve Bank has transferred 1.3 trillion rupees to reimburse the contingency fund. Actually, it has more than reimbursed the contingency fund because as a result of this 1.3 trillion, which gets added to actual realized equity, the actual realized equity has gone to 6% of the balance sheet. Now, the Jalan Committee requires that this equity should be 5.5% to 6.5%. This is the first time the Reserve Bank has brought it to 6. Last time it was 5.5. So what they have done is that it's a good year of income, so they have transferred less surplus to the government, which is 87,000 crore rupees, and used a little bit to increase the equity of the Reserve Bank. I have been telling you that the income is very good. Here's it. Here are the details. The total income has gone up by 47%, but interest income alone has gone up by 50%, while other income by 42%. Now, interest income has gone up because interest rates went up and the Reserve Bank lends money to banks in repo. So that income that it got from the banks, that is what has resulted in higher interest income. Other income is because it has sold dollars and made money. That also has gone up by a handsome 42%. So the only expenditure that the Reserve Bank had is the provision that it transferred to the contingency fund. That was 1.3 trillion. This is the balance sheet of the and P&L of the Reserve Bank. The other big chapter of the annual report is its comment on the economy. The Reserve Bank sounds very, very confident that we will get to 6.5% growth this year, though many like the IMF and other economists are at 6%. The Reserve Bank is very confident that it will reach 6.5%. The only headwinds are global slowdown and any financial market volatility. The Reserve Bank also goes on to say that it wants to strengthen the banking sector given the problems we are seeing in the United States. They're going to use the good times to push this expected loss provisioning, which is already in the public domain. They also want to do a thorough review of prudential guidelines, as well finalize the securitization rules for selling stressed assets. So that's the highlights of the economy chapter.
Lata, many thanks for joining us. Vedanta's promoter Vedanta Resources has created a pledge on 4.4% of its overall holding in the company. The pledge was created in favor of Glencore International on the 25th of May to borrow $250 million. Glencore is the world's largest mining company in revenue terms. The announcement comes just days ahead of the scheduled maturity of the company's junk-rated bonds worth $500 million. Japanese medical equipment manufacturer Omron will set up its first plant in Tamil Nadu for the making of medical devices. Government sources have confirmed to CNBC-TV18 that Omron will set up base just outside of Chennai as it invests upwards of $15 million to manufacture devices like blood pressure monitors and nebulizers. The investment deal was struck during Tamil Nadu Chief Minister M.K. Stallin's latest visit to Japan and Singapore to attract investments into the state. It also comes on the back of similar investment and expansion plans from MNCs like Hyundai, Mitsubishi Electric and Cisco, to name a few. Well, it was a nail-biting IPL finale. Chennai Super Kings clinching a last-ball win over the Gujarat Titans to lift the trophy for the fifth time, chasing 171 in 15 overs in a rain-interrupted match. Ravindra Jadeja hit a 6 and a 4 in the last two balls to take CSK over the line. And while the Gujarat Titans innings was drawing to a close, the number of concurrent viewers on Jio Cinema reached 3.2 crore. Remember, Jio Cinema, which had been streaming the tournament for free, had broken all records last week. It had become the first streaming platform in the world to draw 2.5 crore concurrent viewers, a new record.
One is the popularity of the format itself of the property of the Indian Premier League, which is, is just breaking all barriers and breaking all records, as we know. Passion for cricket or the consumption of cricket is certainly recession-proof in the sense that in India, people will still watch cricket and will watch wherever cricket is played. Whether the profitability matches that will really depend on how robust the economy is.
As the value rises in terms of the broadcast money that comes in, I'll use a small example here. Until now, cricket was a product that broadcasters bought on a rental model to sell it for a subscription fee and earn from it. Cricket was the chief product that the broadcaster sold. With the advent of technology and other businesses, looking to use cricket as a catalyst to build themselves, cricket is not a chief product and not the chief product anymore. Cricket is a byproduct. A broadcaster will now use cricket to sell everything else.
Well, the IPL economy. On to a CNBC-TV18 exclusive. A government-appointed interministerial panel is in the final stages of preparing a draft digital competition law. The draft bill aims to provide startups a level playing field with big tech companies. Parikshit standing by with the details. Parikshit, take us through the contours of the bill.
Well, yes, the Parliamentary Committee on Finance had recommended an ex-ante law on the lines of the European Union to check big tech companies from dominating the digital marketplace. The government had set up an interministerial panel to examine the need for a law separate from the Competition Act. We hear that the draft of this proposed digital competition law will be ready very soon. The 10th meeting of the interministerial panel, headed by the MCA secretary, will meet on the 1st of June, and sources say the committee members will give final touches to the law in this meeting. The committee will then recommend the draft law to the Ministry of Corporate Affairs, and the proposed legislation could be brought to Parliament in the winter session. The committee members are considering a criteria to identify gatekeepers. Gatekeepers in the digital markets would include e-commerce, search engines, food delivery platforms, cab aggregators. These are large big tech companies which would be identified as gatekeepers based on the number of active users and the global turnover. These companies would have to comply with at least 10 obligations, including interoperability, anti-steering provisions, portability, and data usage provisions as well. The committee is considering a penalty to the tune of 10% of the global turnover of a big tech company in case they do not meet these obligations and violate them. What is the larger objective? Well, the government is keen on making sure that startups have a level playing field with big tech companies in the evolving digital market.
Parikshit, many thanks. Now, India's aviation sector has been flying through turbulence, and Gulf-Past grounding has brought more pain to air travellers ever since the airline suspended operations. Airfares, especially on routes where the airline operated, have seen a dramatic spike. Madiha standing by to take us through what one airline's grounding has done to the sector. Madiha, airfares soaring on popular holiday routes.
Indeed, Shereen, Go-First's collapse has burnt a big hole in the pockets of air travellers. Airfares have seen multi-fold spike ever since the airline shut operations, and as you mentioned, some of the key routes that Go First operated on are seeing a very sharp surge. Look at these fares that I gathered from various booking sites. So if you're traveling tomorrow from Delhi to Leh, you have to pay over 36,000 rupees. Then Mumbai to Leh, the lowest fare is 17,000 and the highest is 35,000 rupees. Delhi to Srinagar, a very popular Go First route, is costing 11,600 rupees as the lowest fare and 26,700 rupees as the highest fare. Then look at Mumbai to Jammu. Lowest is 10,800 rupees and the highest is 52,600 rupees. These are the highest ever rates seen on these routes. Similarly, the other routes like Delhi Goa, Delhi Patna, Mumbai Varanasi and Mumbai Chennai are also seeing a dramatic spike in airfares. And I have checked these fares at around 4 p.m. so there are high chances the cost could even surge further after some time. Let me now talk about how exactly is Go First grounding impacting airfares. India saw 4.2 lakh passengers on 29th of May on domestic routes, so air traffic is continuously rising. Go First, before suspending operations, carried about 35,000 passengers daily. Now that the airline is shut, this traffic is being directed to other airlines. So a squeezed capacity and increasing demand is leading to airfares skyrocketing. And if you look at the market share of existing airlines, Indigo has gained significantly since January, growing from 54.6% in Jan to 57.5% in April. Akasa Air is another beneficiary. It has gained market share from 2.8% in January to 4% in April. But this is also at the cost of one airline going out of business, at least for now. And if we want airfares to come down, we will probably need more players in the market.
Well, Madiha, many thanks, and no clarity yet on Go First's revival. Now, the central and Manipur state government have announced compensation of 10 lakh rupees for the families of those killed in the ethnic violence in the state. This comes as Home Minister Amit Shah visits the state to review the situation. Meanwhile, Congress leaders led by party chief Mallikarjun Kharge met President Murmu demanding a high-level inquiry into the violence. The Delhi High Court has denied bail to former Deputy Chief Minister Manish Sisodia in a CBI case over the alleged corruption in the implementation of the excise policy. A single-judge bench of Justice Dinesh Kumar Sharma stated the allegations against Sisodia were serious. The Aam Aadmi Party leader was arrested by the CBI in March this year on the charges of criminal conspiracy and intent for defrauding. Global stories we're tracking tonight. Russia has accused Ukraine of launching drone attacks on its capital, Moscow. The country's defense ministry has called the attack a terrorist attack and has said that its air defenses destroyed all 8 drones. Ukraine has denied any involvement. With a large population in the working age group, India may have a demographic advantage against many countries at the moment, but this could come to an end in a couple of decades. This means that India will have a large population that is dependent on savings or social security measures to support itself. But with no official social security net to speak of, pension planning will become a game changer. Shraddha Tiwari reports that startups are zeroing in on this opportunity.
1.42 billion people call India home. So of April 2023, this population is more than China's. Over 60% of this population is in the working age bracket. But in a few decades, these people will belong to the aged or retired category. The UN estimates that by 2050, every fifth person in India will be above the age of 60. And that could be a problem because India does not have a formal social security or pension system that will offer this aging population a security net.
India is low on adequacy as compared to many other countries. And the primary reason is that we don't have any social security system. There is no minimum pension that everybody in the country will get.
The government has tried to push the national pension system as a more secure pension system and position it as a form of retirement planning. But NPS is plagued with low adoption, adequacy, and minimum pension norms. However, NPS is voluntary. This has breathed life into a slew of startups who are designing platforms to not just improve access using data-driven goal-setting models, but pushing its wealth management features through innovations like real-time tracking, comparisons, and goal-setting that adjusts for inflation.
There's no loan available for retirement. There's no EMI set for that. So we do build nudges based on data. For example, I can compare my retirement versus what my peer retirement look like or ideal retirement look like. Right. And if I increase my savings by 5% or 10%, how would I improve it? So it's more data driven. That's how you optimize the cost.
Especially as your money grows, you got 1 crore, 2 crores, 5 crores invested through us. You want to be able to be sort of guided through that. And exactly what the relationship manager or the client engagement person is doing what the platform would do.
The influx of startups has helped ramp up NPS adoption. As of April, the National Pension Scheme has over 1.73 crore subscribers with above 8.9 lakh crore rupees worth of assets under management. This indicates that the NPS subscriber base has increased around 23% between FY22 and FY23. But this number is still minuscule when compared to a working population that the World Bank estimates stood at 52 crores in 2022. Startups say the only way this will go up is if the government actively partners with them to expand reach and offers a push to retirement planning products.
It could be the state plus the startups combining together and building up a solution. So I don't want them to build a solution alone.
Despite the pandemic accelerating digital adoption, the national pension system is largely ridden with lower adoption even among the working class. According to Mercer's Global Pension Index 2022, only 6% of India's working population is covered by private pension, mainly because a majority of the working population is in the unorganized sector. The government has now started reviewing the NPS system following concerns over lower payouts and trouble with accessibility. But most of the government's moves to push NPS have targeted government employees and not the private sector. In Mumbai, Shraddha Tiwari.
Well, we will take a break, but coming up next, private equity investors looking for more than just a spectator seat in the companies they invest in. That and more when we return. Private equity firm Warburg Pincus has picked up a 90% stake in Vistar Finance for $250 million. This gives Warburg a controlling stake in the NBFC that lends to micro, small and medium enterprises in India. After the deal, founders Brahmanand Hegde and Ramakrishna Nishtala will retain a small portion of their stake in the company. Now, the deal has provided early investors like Elevar Equity, Omidyar Network India, Sama Capital and Westbridge Capital an opportunity to exit. But this is not the first time a private equity player has picked up a controlling stake in a company in India. Yusuf and Arundhati Ramanan find out how this particular trend is faring.
Well, the Warburg Vistar deal is actually the fifth deal this year where a private equity firm has picked up a controlling stake in a company. According to data from Grant Thornton Bharat, some of the other key deals in this vein include Advent's purchase of 50.1% in Suvain Life Sciences from the Jasti family for $770 million and Brookfield Asset Management's purchase of a 51% stake in CleanMax Enviro Energy for $304 million. In all, these 5 deals have a total value of $1.3 billion. The Grant Thornton Bharat data says that in 2022, India saw 11 deals where PE firms picked up a controlling interest in a target company. These deals totaled $5.6 billion and include Shell Overseas buying 100% in Spring Energy for $1.5 billion and Ind Infravid Trust buying 5 operational road projects from Brookfield Asset Management for $1.2 billion. However, the overall trend for the last few years suggests a slowdown in such deals. 2019 saw 27 deals worth $9.4 billion. 2020 saw 17 deals worth $3.4 billion. 2021 saw 15 deals worth $5.6 billion. And like I just mentioned, 2022 saw 11 deals worth $5.6 billion. Let's look at sectors now. The data from 2019 onwards shows that deals in the healthcare, energy and real estate space have been the most popular. Pharma, healthcare and biotech had seen as many as 12 deals since the beginning of 2019. Energy comes a close second with 10 deals, and the real estate space stands at third spot with 8 deals. In value terms, however, the number one spot goes to telecom, followed by IT and then energy. And here are the two biggest deals we've seen in the last 5 years. Brookfield Asset Management, British Columbia Investment Management Corp and GIC together spent $3.7 billion to acquire Reliance Jio Infratel in 2019. The second biggest deal, at a little over $2 billion, saw Blackstone buying a 55.3% stake in Mphasis in 2021. Now, like I said earlier, we may have just 5 such deals so far this year, but only 5 months are done. And we're already at 29% of the entire deal value seen in 2022. So there is a chance we could end the year better than 2022. With Yusuf Kuttiparambal in Mumbai, this is Arundhati Ramanan.
The Pradhan Mantri Mudra Yojna is a scheme launched by the Modi government in 2015 to provide loans to up to 10 lakh to the non-corporate, non-farm, small and micro enterprises. These loans are given by commercial banks, small finance banks, MFI and NBFCs. The scheme completed 8 years in 2023. Shivani gets us a status check.
Well, according to government data, 69% of the 40 crore borrowers under Mudra Yojna are women entrepreneurs. A total of 27 crore Mudra loans have been disbursed to women beneficiaries so far. Also, more than half of the 40 crore loans are given to SC, ST and OBC entrepreneurs. Approximately 21% of the total loans have been given to new entrepreneurs under this Yojna. Under the Mudra Yojna, enterprises have been categorized in 3 broad baskets based on the need for finance and stage of maturity of the business. At the Shishu stage, enterprises can get loans up to 50,000 rupees. In the Kishore stage, loans above rupees 50,000 and up to rupees 5 lakh can be taken. And in the Tarun stage, enterprises can get loans above rupees 5 lakh and up to rupees 10 lakh. If we look at the 3 categories of the loans, 40% of the loan amount has been sanctioned to the enterprises in rupees 50,000 category, 36% in the 5 lakh category and 24% in the 10 lakh category. Let's now take a look at the amount of loans sanctioned and disbursed under the scheme since its inception. In financial year 2015-16, the number of loans sanctioned stood at 3.48 crore. The amount sanctioned was 1.37 lakh crore and the total of 1.32 lakh crore was disbursed. Since then, the number and amount of the loan has gone up substantially. In 2019-20, the loan sanction reached a record of 6.22 crore with rupees 3.37 crore sanctioned and 3.29 crore disbursed. However, in the financial year 2021-22, the number of loans sanctioned under the scheme stood at 5.37 crore, the amount sanctioned stood at 3.39 lakh crore and the total disbursed was 3.31 lakh crores.
Shivani, many thanks. Now, as the Modi government completes 9 years in office, we've been talking to economists, former policymakers to understand what the key priorities for the government should be going forward. Rajiv Kumar, the former vice chairman of the Niti Aayog, told me there is a need for the centre to ensure that adequate capital expenditure is deployed by states. Meanwhile, Ratin Roy, the MD of the Overseas Development Institute, believes that inequity could be a key challenge for the centre that it should work on going forward.
It's critical to work with the states. There's a lot of action. All of that action is actually at now the states and not in Delhi. The thing is that the 15th Finance Commission, which this government, whose recommendations this government, implemented right away, had increased the devolution of the, of the tax revenues, etc., to I think 42%, from the earlier 31% or something like that. So now that's already been done. What you need now to do is to work with the states to ensure that their capital expenditure on infrastructure, on the facilities for the poor, on the delivery of goods and services for those at the bottom of the pyramid are all much better.
Long term, we cannot subsidize the majority of our population in perpetuity. That is a failed growth model. It's a good thing that the government is ameliorating essentially what is a massive market failure.
And you can catch our special on the 9 years of the Modi government tonight at 10 p.m. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC-TV18.